Hey everyone, this is Deep Dive Stock Earnings. A lot of you asked me to take a look at Zoetis, so I spent some time digging through the numbers. And honestly, the results surprised me. This stock has dropped about 50% from its 2021 high. But when you actually break down the fundamentals, it doesn't look anything like a company that deserves to lose half its value. In fact, based on today's valuation and its growth potential, I think Zoetis has a real shot at a 3x return over the next 5 years. Of course, there are also 2 real risks I'm keeping my eye on as a value-focused investor. Let's walk through everything from the beginning. Zoetis is a pretty straightforward business. They're a major player in animal health, developing and producing medicines for pets and livestock. So if you have a pet at home, there's a good chance you've bought one of their products before, or your vet uses them regularly. Now the big question, if the fundamentals look this steady, how did the stock fall 50%? Let's look at the past few years. Zoetis revenue has been climbing consistently, no breakdown, no reversal. Their earnings per share keep rising as well, and growth has even been accelerating lately. Free cash flow had a weird spike in 2022, but right now it's already higher than it was in 2021, and future estimates show it continuing to move up. Just from these numbers alone, you'd start thinking the market mispriced this stock. But here comes the first real risk, their debt. For a while, debt was trending down all the way until 2024, but recently it started climbing again. Not only that, their debt is about 3 times the amount of cash they have, which means they can easily pay it down. And for long-term investors, that's something you can't just ignore. Now about valuation, today's divided by E is much lower than the 5-year average, and the forward divided by E is also down. It looks cheap on the surface, but keep in mind that valuation in 2021 was inflated by hype, so today's price feels more like back to normal rather than super cheap. That said, their ROIC is around 25%, which is excellent and shows the business is incredibly efficient at generating returns. The second big risk is that Zoetis keeps lowering its guidance. Revenue guidance was cut from $945 million to $940 million. Most of their growth metrics, revenue, net income, segment numbers are only in the mid-single digits. Even when you look at the global breakdown, only a couple of markets show double-digit growth, and one major market actually shrank 26%. You can see why the market has doubts about future growth. But the overall industry trend is still solid. The pet health market is expected to grow around 9% a year through 2030, so Zoetis should at least grow with the industry. Plus, spending on pets is rising. Around 48% of pet owners said they spend more on veterinary care in the past year. Younger generations especially, they treat pets like family, not animals, and they're willing to spend more on wellness, supplements, and preventive care. I totally get this. We have a dog at home too, and it matches what I see personally. Insider buying also gives me confidence. Over the last 6 months, insiders bought 22,000 shares and sold only 650. Net buying of over 21,000 shares is usually a very positive signal. Now let's talk valuation. The stock is trading around $120, and after applying a 30% margin of safety, my intrinsic value comes out to about $154. The extreme range of my model is $86 to $541. But those are unrealistic extremes. You shouldn't take them literally. In the worst case scenario, say 3.5% growth and a 19x terminal multiple, THE stock might fall to around $100. That's a real risk, and investors should be aware of it. In the best case scenario, 23% growth and a 55x multiple, you could get a $540 valuation. But honestly, that's not happening anytime soon. A much more realistic setup is something like 9% annual growth and a 2530x multiple. With those assumptions, I see a fair price of around $160. That's roughly 30% upside over the next 6-12 months. And if you zoom out to a 5-year horizon, a 3x return is absolutely on the table. So to wrap things up, I think Zoetis is a solid value pick. It's stable, it has strong cash flow, great ROIC, and the long-term trend of rising pet spending is not going away. Yes, the stock has risks, debt, and lowered growth guidance, but I think they're manageable. In my view, the upside is much greater than the downside. For me personally, Zoetis is a buy right now. What do you think about Zoetis? Are you holding it? Let me know in the comments. I'm Deep Dive Stock Earnings, and I'll see you in the next video.